What is going on, everybody? It's Stas here. So the markets were choppy today. We had the S&P, the Dow, and the NASDAQ break even. We had the Russell go down 0.4%. So we got to break it down, go over some stocks, some charts, my thoughts on the market. So sit back, relax, hit the like button, subscribe, and feel free to check out my Patreon. If you guys want all my buys, sells, call outs, morning update videos, plus more, all of that's on Patreon. And you guys could get 50 free bucks from M1 Finance. Both of those are linked right down below. And with that being said, let's get right into the video. So even though we pretty much broke even all across the board today in terms of the three main indexes, and we had the Russell down about 0.4%, I still believe today's trading session was a win for the bulls. And let me explain why. What we're noticing here on SPY, and I kind of mentioned this in my video earlier today, but I'll mention it again in this video. What we're noticing today is we broke out of the highs from Friday, and that was actually in the pre-market session. We hit 469 today pre-market, and Friday we hit a little bit above 468. So what that tells me is that SPY hit a higher high, and then we got a bit overbought on the 10-day chart, and that is when we saw that sell-off in the beginning of the day, which I covered in my video from earlier today. And in that video, I mentioned to you guys this double bottom that was forming on SPY. It was at about 466. And I told you guys, look, we might see a rebound, we might see consolidation, or the double bottom really might not mean anything. And now that we saw what ended up happening as the market is now closed, it's currently 5:20 p.m. on the East Coast, we can clearly see we saw the double bottom, we broke out, and then we ended up consolidating for the rest of the day. So what that's telling me is that bulls are stepping in and buying up this dip right around the 180 SMA here on the 10-day, 30-minute chart, which honestly is what I was expecting based on what we talked about in my video from earlier today. So we're still well within the breakout. We're just simply seeing some profit taking and a little bit of a drop today. That's all we saw. And again, now bulls are stepping in, buying up the dip, and we're moving up even in the aftermarket hours. And it's the same thing for QQQ, right? Let me pop that up. We saw a nice pop this morning in the pre-market. We took out the highs from Friday. We saw the pullback in the beginning of the day. Then we got the double bottom, which we talked about in my video from earlier. And then we pretty much broke out from there. And we started making some progress to the upside. And going back to that 10-day chart, you guys can see buyer stepped in right around that 180 SMA on this 10-day chart, and they bid it up, right? They pushed it up, and now it looks like we're simply continuing the breakout that we've been in since Friday. So what do you guys think? Drop me a comment down below. What are your thoughts? Are we going to all-time highs from here? Is this a bull trap? What do you think? Let me know down below in the comments, and make sure to smash that like button. Let's try and get at least 200 likes on this video. I challenge you guys, 200 likes, hit the like button. It really helps me out in the YouTube algorithm, and it just tells me that you actually like my videos, and it helps promote the videos to a larger audience. So now let's talk about some stocks I'm looking at, some of which I think one reported earnings today, and that's the first one we're going to talk about. It's Lucid, ticker symbol LCID. And now that we're on the topic of electric vehicles, let's talk a little bit about Rivian as well, which actually, let's go, hold up. Let's go to Lucid first, then we'll go over my opinions on Rivian, I think it's Rivian. Lucid today, they just reported, so let's see what ended up happening. They say customer reservations rose to 13,000 in Q3, and these are higher end electric vehicles. From my understanding, they're very expensive. The Lucid Air, I believe, is what it's called. So we have 13,000 reservations in Q3. The balance sheet for Q3 shows about $4.8 billion in cash, which is a lot of cash. So they're going to be using that cash. Obviously, they're going to put it to work. And we've been calling this breakout out. I didn't play it. You know, you guys, if you watch my videos and you're in my Patreon, you know that I didn't play Lucid Group. But hey, we called it out nonetheless, and I know some of you guys made some money on it when it broke out above 30. It hit almost $50 per share, and now it's actually moving a little bit in the aftermarket hours, and I'm still sticking to my stance that this is a bit overbought. I mean, it's ran up almost over 3x, honestly. If you look at this $15 low from the beginning of September, now we just hit almost $50, and it's the middle of November. So in the past 2.5 months, it's gone up over 3 times. So in my opinion, an entry point, if you really are dying to get into Lucid, which I'm not telling you guys what to do, always do your own research, but let's say it pulled back 30, 35, that would be a more reasonable price. And you guys might be looking at it like oh, it's never going to happen. It's at 46. It's not going to pull down again. Trust me, you'd be surprised what happens, guys, especially with these volatile electric vehicle stocks. They could come down. And if you're patient, you have your price targets and you're diligent about it, you're very patient about it, you might be able to get in at a much lower price. Might. That's the key word, might. So be careful with Lucid and be extra careful with Rivian, guys. I mean, I've been getting a lot of questions about it. Stas, are you buying Rivian? The short answer is no. I'm not buying Rivian, and I don't plan on buying it because I think it's overvalued. I mean, the company is valued right now at $130 billion, and they haven't even sold cars. They have no revenue. I mean, that to me is just straight up euphoria. It's crazy. And me personally, I already have exposure to this space. I have an investment in NIO from like 2-3 years ago. I have an investment in Tesla, like most of you guys watching this video. And I actually plan on buying Ford, not at these prices, but next time we see a bit of a drop in the markets, I want to get my hands in Ford. Not a crazy size position, but I do want to have a little bit of money in Ford. They pay a nice dividend right now, and I believe they have a future in this space. You know, of course, in the automobile industry, but where the whole electric vehicle movement is going, I do think Ford has a space there, or a spot in that space. So for me, guys, Rivian, I'm not looking to touch it. I think it's overvalued, and I'm not telling you guys not to buy it. You know, you could make money on it, but for me, this, honestly, this might sound crazy. I think this is like a $30 billion company, maybe $50 billion. I mean, no one could really value it because, like I said, they haven't made money. You know, they're not doing crazy numbers. They're not selling cars. So, you know, you can't really value it, but $130 billion, I could tell you what for sure, that is a bit lofty, at least in my opinion. But again, you have your own money, you could do what you want, but all I'm saying is be very careful. You know, these are companies, stocks, shall I say, that would get slammed if the S&P went down 10-20%. Trust me, if the S&P went down 20%, Rivian will probably be a $60-$70 stock. It could easily go down 50%. No doubt in my mind. I've seen it happen with other companies that have similar prospects, similar, you know, speculative nature as Rivian. So what do you guys think about that? Do you agree with me on Rivian? Do you disagree? I actually put a poll on my Instagram. A lot of you guys think it's overvalued as well. Make sure to follow me on Instagram, by the way, at StasSurfS, and on TikTok and Twitter at StasSurfS. So let's go over some other stocks. Snapchat, SNAP. This is one that I'm long on. You guys in my Patreon know that. I bought this. I bought it a couple times, or I think twice, maybe 3 times. I forget exactly. But my average cost right now is about $55.10, maybe $54.90, something like that. And I'm up on the position, and I'm also selling the weekly calls on it. I'm actually in a covered call position right now. I think I sold the $58 calls that expire on the 19th, so this Friday. And today we actually got pretty close to $58. We got to 57 plus. We were up a good chunk earlier, and then we saw a bit of a rundown throughout the rest of the day, but we still went up 3.4% on the day. And it seems like Snapchat finally found its short-term bottom. We consolidated at about 52, 53 for a good 2-3 weeks. Now we're starting to break out. With today's move, we took out the highs from last week. We're trading above the 50 SMA, and now it looks like we're trying to fill the gap, excuse me, guys, up towards the 180 SMA. which is right around 60, 65 bucks. And you guys know how covered calls work, right? If the strike price, or rather the price of the stock, goes above $58 by Friday, I have to give my shares away. But the way that this is a win-win strategy is you have to pick a strike price above your average cost. And remember, my average cost is right around 55 bucks on Snapchat. So if this stock did go to 58 plus by Friday, I would make that $3 spread, 58 through to 55, which is $3, right, on the shares. And I would also keep the premium, which I'm trying to think, what was the premium? I forget. It was like 40 cents, maybe 30 cents per share or per contract that I got in premium. So I'm still going to make out well with the trade. But the only downside is you miss the extra upside on the shares if you sell covered calls, which I'm not going to talk about in this video. You can go check out my covered calls video. Just type in Stasserfest covered calls on the search bar, and you'll be able to see that. But overall, I'm bullish Snapchat. I think it's going to be a good stock to hold. And yeah, that's why I'm holding it, selling calls on it. If I get assigned, whoop-de-doo. I don't care. I'll just go to the next one. That's just how it works when you're trading, guys. So the next stock here is Crowdstrike, ticker symbol CRWD. Crowdstrike got crushed today. It went down 10%. The stock fell because Morgan Stanley initiated coverage of Crowdstrike at underweight. The investment firm said in a note to clients that rising competition and slowing industry growth meant that Crowdstrike shares could fall. And you bet your you-know-what that they fell today, but buyers slowly started to step in, which in my opinion is important, at least on a technical basis. Buyers started to step in right around the bottom of this uptrending channel here at about 245, 250, and you guys can see that on the 4-hour chart and on the intraday chart. We hit 245, we ran up about 10 bucks from that low point of the day, and the stock looks like, hey, it might be able to run up a little bit from here, but it's still kind of too early. I'm going to give it a couple of days, see if we consolidate here, kind of like how Snapchat tanked. Took about a week, 2 weeks, 3 weeks to consolidate. Now it's breaking back out. I'm kind of looking at that when it comes to Crowdstrike as well. And let's talk about Dollar Tree, guys. Dollar Tree went ballistic today. It went up 14%. And it was revealed today that, or maybe on Friday, that activist investor Mantle Ridge had acquired a $1.8 billion position in Dollar Tree stock with the intention of making the company take action to boost its stock price. Dollar Tree shares have gained about 45% during the past 5 years, which is not as good as the S&P 500, which went up about 116% over the past 5 years. And Mantle Ridge, if I could say his name right, would like to see Dollar Tree make improvements at Family Dollar, which it acquired in 2015, and change its pricing strategy. Dollar Tree had already announced some changes in recent months, which, if you guys remember, they're not looking to have dollar products anymore due to inflation. And with an abrupt change, this is what an Oppenheimer analyst said. He said, with an abrupt change in strategy from the DLTR management team mid-quarter, there has been speculation of activist pressure behind the scenes. So it makes sense, guys. We have all this inflation. It's not possible for them to keep some of their products at $1 anymore. It's just not possible. They're not making money. It's going to turn into the $2 tree, the $3 tree. In 10 years, it's going to be called, instead of Dollar Tree, the $10 tree, right? Or some crap like that. So be careful with this. It's ran up a lot, but I think clearly there is upside momentum here. So if we see any sign of a pullback, kind of like we saw 2 weeks ago where it went from 116 to 105, then it ripped back up. If we see anything like that, a pullback, I think this could be a pretty interesting opportunity. And by the way, they do have earnings coming up on the 23rd, so in about 8 days. So not next, or actually, yeah, it is next Tuesday. Next Tuesday, Dollar Tree reports earnings. So let's talk about Under Armour, UA. This is one that we talked about before they reported earnings, and I mentioned how they were trading towards the bottom of this uptrending channel, and they were beaten up from about the middle of August, from about 22 bucks down to about 18 bucks, which happened in the middle of October. So 2 months it got slaughtered, and then they reported earnings. boom, we ran all the way to the top of the channel like we called out. We hit that high, and then we saw a bit of profit taking, which is completely natural. It makes sense. And now we're starting to rip back up. You guys can see we hit that 50 SMA on this 4-hour chart. Buyer stepped in, and then today we had an almost 3% green day. So I think now this is gunning, potentially, nothing's guaranteed, but this is looking to make a move back up to about $23 to test that high again by the looks of it. I mean, we're kind of making this J-hook pattern. So I'm going to set my alert at $22, and if we end up breaking out of there, we might be able to snag up $1 per share profit from 22 to $23. So keep your eyes out on Under Armour and TTWO, Take Two Interactive. This is an interesting one that has been beaten down. Well, pretty much just today it got beaten down and went from $188 on Friday. Today it went down $10 to close at $177 and went down about 5.5%. And if you guys didn't know, Take Two Interactive makes some of the best video games out there. Maybe not, I don't know. I don't want to get into that rabbit hole because I know a lot of the hardcore video game people out there, they are very specific, right? But in my opinion, Take Two makes some great games. You know, you have the Rockstar brand, you have GTA, which I love. I've played that for my whole life. Well, not really anymore because they haven't made a game in like 6-7 years. But GTA, Red Dead Redemption, you have 2K Sports, which has NBA 2K. I'm a huge NBA fan. I like 2K. I play that game. I have the new Xbox in the room next to me. You know, I play that from time to time. You know, so these are great games. And overall, the stock has not been doing so great. I mean, it was $214 back in the beginning of the year, and it went down to $144. So it did lose about 32% at one point, and it hit $144 just about 2 months ago. And since then, it started to come back. I think that's when 2K might have released. I'm not sure if there's any correlation there. But it went from $144 to about $195. Now it's pulled back a bit. And notice, when we went from $144 to $195, we broke out of both moving averages, right? We took out the 50 and the 180 SMAs here on the yearly chart. Now we're pulling back within the breakout, and we're still well above both moving averages, and that is where I want to see if buyers step in. Do buyers step in around 170, 175 to bid this back up towards 200? I think that's possible, and that is where we as traders could make some short-term money, right? So keep your eyes out on TTWO. And the last one that I'm looking at here is an ETF, an energy ETF, which you guys in my Patreon know I'm long this ETF. It's ticker symbol XLE, and I believe this one is setting up for the next breakout. What you guys notice is we've seen a lot of choppiness in the oil markets pretty much over the past 3 weeks. You know, XLE's gone from 59 to 57, back to 59. Now it's at 57 again. Now it's breaking 58 a little bit in the aftermarket. So I believe ultimately this downwards channel that we've been in for the past month, we're going to rip out of here. We're already bouncing off the 180 SMA at 57. Like I said, we're above 58 now. So I think we're going to see a breakout on XLE, probably towards $60 plus. And we're noticing the same pattern on CL. Let me pop that up. Can you guys see that? Let me zoom in a bit here. You guys can see exactly what I'm talking about, right? Notice how on CL we've been in this downwards choppy range since the the same time period as XLE, since the end of October. And now we're finding support right around 80 on CL crude oil, and it's looking like it wants to bounce back towards the mid 80s, which I think, and I've mentioned this before, $90, $100 a barrel on oil. It's not too far. It's I personally think it's coming. So yeah, XLE, I'm fully positioned in that. We'll probably, I don't know if I'm going to buy more, quite honestly, because I've bought a good amount, and it's one that I was buying months ago. If you guys recall, I bought, I was in Exxon. I bought that at 40 bucks, sold it at like 65, made some money there. Then I took that money out and I just dumped it in XLE when it was in the low 50s, 50, 52. I might have bought some in the high 40s, and I've just been letting it ride since. I think I bought a little bit in the mid 50s, averaging up a little bit. But ultimately, I think, like I said, 60, 70 bucks per share, maybe even more. That is where I think XLE is going. So that's pretty much it, guys. I'm going to wrap it up here. If you all enjoyed this video, hit the like button, subscribe, drop me your thoughts in the comments. And seriously, what do you think about Rivian? Do you think it's overbought? Overvalued is probably a better way to put it here. Are you buying it? Are you trading it to make some quick money? Let me know in the comments. And make sure to check out my Patreon if you guys are interested. If you want all my buys, sells, call outs, morning update videos, more access to me throughout the day, all of that's on Patreon, link down below. Or you guys can go to StassurFest.com/Patreon. Make sure to also get your 50 free bucks from M1 Finance and your 2 stocks from Webull up to $1,600. Both of those are limited time. All you have to do is use my links down below, deposit $100 into both of those platforms, and we each get some free money. It's that simple. So I'll catch you guys in the next video, which I made one earlier. I'll pop it up here. I'll see you guys there. Thanks for watching. Again, as always, keep crushing the markets. Stay safe out there. Peace out.